Welcome to the American Med Spa Association podcast, Medical Spa Insider. This week, AmSpa founder Alex Thiersch is speaking with Tyler Weinberg, CEO, and Dan Hosler, chairman of the board, both with Aviva Aesthetics.
All right, thank you, everybody. Welcome to Medical Spa Insider. This is Alex Thiersch, and we have on the AmSpa hotline today, the remote hotline. And we're gonna have to get these guys in live one of these days because they are in the great state of Chicago, the great city of Chicago, right down the street from us. We've got Tyler Weinberg and Dan Hosler of Aviva Aesthetics. Dan is the chairman of the board, and Tyler is the CEO. Aviva Aesthetics we were just chatting about this before we hit record, and I'm actually really interested in what they're doing, because they're pitching it as is a alternative to private equity, a way for med spa owners and physicians to become part of something with maybe not quite the same headaches, I guess, for lack of a better word, as doing with private equity. But we're going to talk to them about it and get their thoughts on how it's supposed to work and how it does work, as well as what folks can expect. So first of all, welcome to the podcast, both of you. I appreciate you being here.
Thanks, Alex.
Awesome. So Tyler, I just start with you, and Dan, please jump in. I want to make sure we hear from you both, but tell me about Aviva Aesthetics and how it works, because when you were explaining to me, I mean, it makes sense from a kind of a conceptual standpoint, but I think it's a really cool idea, and I'd love to hear more about it and let folks understand how it works.
Sure, happy to share. Do you think that people who are listening are aware of the traditional private equity-backed platform and what that model looks like? Or
well, sure, but let's go ahead and if we can always talk about that as well, because there's going to be new people who are listening, and it always bears a refresher. You know, private equity sometimes has its own vocabulary, right? So it's sometimes you gotta refresh. But yeah, let's go ahead and not assume anything.
Okay, great. So yeah, I think it's always good to kind of compare, what people's options are, right? And we see kind of three primary options. One is continuing to run the great business that they are, and continuing to own that and not really thinking about an exit or saying I'm going to do that later. Then there's also the traditional private equity-backed platform, which there are many of them out there. And then there's Aviva, who's really providing an alternative. So kind of touching on the traditional model first, depending on how big of a business you have, and some other factors, typically you're looking at around a 5 times EBITDA multiple when you're selling to traditional private equity. Maybe it's 4, maybe it's 6. If you're really big, maybe it gets up to 7.
Right.
And then you get, let's say 70% in cash and 30% in equity rolling over into that business. And we haven't even touched on the fact that oftentimes people hire business brokers or other things like that may take 10, 15% of the exit proceeds. So when you think about what you're getting after taxes and all of that in terms of cash, it's not always as much as people kind of thought on paper. You also then, typically give up control of your business. A lot of people are kind of saying that you still have control, but there's a lot of pressure to meet certain metrics and other things like that. You also are typically required to be an employee of the med spa for a certain amount of time, which is just a big change from what people are used to. These people are entrepreneurs. They built an amazing business. And look, all of these things can work out great, or, they can be challenging for people. And it really just depends.
And I've had many conversations with folks who have gone that route, and some of them flourish, but there's a portion of them that tend to just be a little surprised at how it all goes, right? Because all of a sudden they're no longer the owner of their business. They're not really calling the shots, and no matter what is said ahead of time, when the rubber meets the road, you're going to have to produce. So, okay, so that's kind of the traditional model. What have you guys done to kind of offset that? I know you've got something called entrepreneur equity, which I would love to kind of explain too, because that's a cool. It rolls right off the tongue. So
yeah, our marketing team will appreciate that. And our goal is, you have private equity and then you have entrepreneur equity, and our model pretty much allows the med spa owners to build their own private equity style platform where they're in control. So our model is all about alignment of interests, and we think that we provide the best opportunity for alignment of interests, in building a platform. So a couple things. So basically, our model, you keep complete autonomy over your business. You own, all decision making, everything like that. But you do get the back office support that you're looking for. So you can really focus on doing the things that you love, which is typically treating patients and interacting with patients. And then you also have the ability to make 2 to 3 times as much money compared to traditional models when we sell as a group. One other thing to note that is pretty big differentiator is our board of directors is majority med spa owners. So we have the med spa owners that are really driving the results, and our job is to make sure that we're doing what the med spa owners need, versus traditional private equity. They have significant amount of investors that they need to prioritize making sure they're making returns and protecting their downside and other things like that. The med spa owners really are our investors. So it's all about what they need and what we can do to help them.
Yeah.
Alex, you brought up an interesting point too about, if you were to sell 70% of your med spa to a private equity backed group, and then some people do flourish afterwards. I think one of the interesting things though to define is, that flourishing though, right? 70% of that upside you've sold to private equity. And so it's private equity that gets to keep that upside. And that's probably the biggest difference in our model is, right off the bat, right? All of our platforms, including Aviva, we've got really good contracts for the neurotoxins. We have really good contracts for the fillers. And I think the difference is that's not factored into your initial valuation analysis typically, right? So the day after you partner with a traditional private equity backed group, they're going to put you on new contracts. All of a sudden, your EBITDA is significantly higher. And yes, for your 30% reinvestment, your stock that you own, it will appreciate in value, but you've given up 70% of that. And so that was something, having worked in healthcare private equity for the last 20 plus years, part of the reason why we started DuneGlass Capital and why we're so excited about Tyler and Aviva Aesthetics is to say, listen, let's make sure that the entrepreneurs get rewarded for that hard work, right? It's sort of an information advantage that private equity has used against entrepreneurs. Let's flip that upside down. Let's use entrepreneur equity to empower. I wish I knew how I made those background effects go, but yeah, little fireworks when I start talking.
That was awesome.
That's the passion that you have, Dan.
I mean,
that's
you
right.
just set it off.
Empower the entrepreneurs to really keep more of the upside, and I think that's at the crux of everything we do at DuneGlass, and certainly everything that we're doing at Aviva Aesthetics as well.
Okay. All right. So I want to make sure I kind of understand the nuts and bolts of this because I think I do. So, a med spa owner is obviously becoming part of this platform. When you talk about a platform, usually we're talking about, a company that owns all of the med spas and then provides a lot of the back office services, a lot of the things that make the med spas run. So you still have that kind of company that that platform that they're investing in, but they are the ones that own that platform. Is that right? And then when other med spas join, they also co-own in that platform. So they're all kind of becoming co-owners of a larger med spa chain almost.
Exactly. I think an easy way to think about it is instead of a traditional cap table or like a stock ownership table, Aviva Aesthetics ownership model is that your ownership is based on the numerator, which is the earnings that your med spa brings to the entire platform, divided by the denominator, which is the earnings from all of the med spa owners. And so if you think about it, as more groups join, technically speaking, your ownership gets smaller, but of a larger group of businesses. And then with the size and scale that we expect to get, that's how you start to see that multiple start to get higher and higher. And so, turning over and allowing our med spa owners to get more of a private equity style exit multiple.
I got you.
One other thing,
you're mentioning sorry, go ahead.
Yeah, just to add, so when you join our platform, you're keeping all of your cash flow even after joining, which is not something that would happen with other private equity platforms, except for the MSO investment that we use to build out the team. But also, we have a lot of people saying, "Oh, I'm not ready for an exit," or "Oh, let me make my financials look prettier before I show them to you." But with us, we're all about aligning interests, and it's when you join, we want to make sure you're having a great business and but we can help you. But it's really about what your EBITDA is upon that second transaction. versus that first. So if you want to open a second location or a third location after joining, you can get credit for that. And you get full credit for it, not just a small amount of credit. So I'm not sure if that makes sense, but it's a really important point that, as long as you are a great med spa owner that's passionate and wants to be part of something bigger, there's an opportunity to have a discussion.
Right. Gotcha. No, I think I get it. And it does make sense. So then is there so there obviously is an MSO, a management company that is set up that handles some of that back office. You mentioned, Dan, purchasing of injectables. I imagine those other things. So what is it just like a typical fee that is paid for the MSO, or is that what some of the med spas are investing in at the outset? How does that work? How does Aviva get their cut out of all this?
Yeah.
Sure.
So Dan, you want to take it?
Yeah,
Go ahead.
Dan, go ahead.
Yeah, I'll start. So each of the platforms that we've started at DuneGlass operates a very similar way, and that is, as a group joins, they pay 4% of their revenue into the MSO, and we use that money to fund what I like to call the people, the processes, and the systems that allow us to offer more and more services. And so, as you can imagine, as we build it up over time, more is able to be delivered to the individual med spa owners. And the interesting thing about that 4%, I like to think of it as like an investment, right? You're investing in your own private equity firm. So this is your investment in your own firm. As it gets bigger, more services can be offered down the road. And then here's the fun thing. It's a tax deductible expense. So like Tyler said, you continue to keep all of your excess free cash flows except for that 4%. And so when you take the tax deduction as a business expense, the impact to you, to your bottom line on a post-tax dollar basis is only about 2.6%. And then if we live in a state income tax state like Illinois or a couple others where we operate, it's even a little bit better because you get the deductibility of the state income tax as well. So it's a pretty efficient model that allows the business owners to help build the MSO brick by brick. But because DuneGlass has done this, I've been in private equity 20 years. I've done now, I think it's 10 or 11 kind of consolidation plays. And so you have the playbook on how to do it efficiently and do it in a kind of specific order. But it's fun because it's very much directed by the med spa owners, and businesses are changing all the time. So you might wake up and say, hey, you know what? Like for instance, GLPs and semaglutides didn't exist a couple years ago. And so you might say, oh my gosh, like we should invest in a program to safely and legally offer medical weight loss programs in our med spas. We now have the resources to be able to teach people how to do that and how to make sure that you're complying with medical laws that are in place today.
I guess so. The med spas are kind of buying in that. And is that a one-time fee, or is that annual fee that they're putting in?
It's typically paid monthly in arrears. And so the idea is, as we help the businesses grow, then technically speaking, a lot of times we can even reduce the 4% just from the cost savings. Tyler and his team,
Right.
the reductions in some of the inputs to the business model are pretty spectacular. So as soon as you join Aviva, right, in many ways, that 4% is already getting chewed through because of the cost savings that Aviva can provide.
Gotcha. And Tyler, I'd love to hear about how do you do that? Talk about that from, you're coming in, your job obviously is to make things more efficient, I would imagine, to make sure that, because you're trying to help everybody else make money and grow the platform. What do you do to help the entrepreneurs realize that goal?
Yeah, so obviously, or I guess not so obviously, we're somewhat early on. We just announced the platform in, let's say, August of last year. So, and we already have 6 partners. So we've really had
awesome.
great success, and they're really impressive people. So the first thing that we've done and focused on just thinking about how we can scale this, right? We're asking people to make an investment in themselves and to bet on themselves to build something bigger. So, we've been able to make great partnerships with key vendors in the space in order to literally, people are buying the exact same products, right? It's not controversial. If you're using one brand of neurotoxin and you want to keep using that, that's great, but we're going to be able to help you with all of those. But right now, we're already saving partners, let's say 1.5% to 2% of revenue. So, that is kind of, directly going to increase their EBITDA. So on the exit, they get credit for that as well. So then you say, oh, we're saving 2%, then it's really only 2% net. And after tax, it's more like 1%. So, cost savings is something that's been very good to do. And we have some really great vendor partners. So I spent a lot of time on that. And then it's also helping with building out KPIs and KPI dashboards. First of all, to make sure they understand how their business is running, and then having the ability to collaborate with other people as a part of the platform and say, oh, I'm doing, I have this pre-book percentage. Okay, I know what it is, but is that good? And what could I make it? What's realistic? You're never going to have 100%. So what is realistic? And let's compare it across the different groups. So that's something that a lot of these businesses, they tend to live in their own business, which is great, but they don't necessarily have that network of trusted confidants that they can work with. And that's another thing that we're providing.
I'm Kathy Christensen, President and CSO of AmSpa. Don't miss Medical Spa Show 2025, April 10th through the 13th at the beautiful Wynn in Vegas. Use code Medical Spa Insider MSS25, all caps, as a promo code when you register at www.medicalspashow.com. See you there.
Promo code expires on April 10, 2025 at 11:59 p.m. Pacific Standard Time. Promo code only applies to the primary registrant. Promo code cannot be applied towards additional attendee registration and cannot be combined with any additional offers. Discount only applicable to new MSS 25 registrants. Yeah, it's a really cool concept. I guess my and sitting here listening to you talk and thinking, my big question if I was an owner would be, as we add other owners, are you helping with that kind of vetting service? Because again, part of the issue is, you don't want to bring on an owner who's going to tank the whole thing, right? That's going to, you're getting yourself in bed with other owners that you might not know. You might not really know what their business does. You might not know their acumen. Do you help with some of the diligence and all that? How does that work?
Yeah. I mean, that's a big part, is making sure that we're adding the right people, and our board is very involved in that process, which, like I mentioned, is majority med spa owners. So they're able to, help to evaluate these businesses, and on top of the financial and legal diligence that we're doing, they can help with the clinical diligence. And we also, through our legal structure, just have a lot of ways to protect groups from a bad seed or two. Because when we're looking to add in 50, 60, 70 businesses, we can do our best to do that, but through our legal structure, without getting into every little detail, everyone's protected. And it's really great where if you do better, if you grow your EBITDA faster, you're going to get a bigger reward. So your incentives are fully aligned. And everyone ideally would be growing their EBITDA as fast as possible. But, when you have that many groups, you're of course going to have some people that are doing better than others, but people shouldn't worry about that. And we can definitely address that on kind of an individual basis.
I think you also find that this very much speaks to the the entrepreneurial growth mindset type of business owner. So the power of word of mouth. I think about some of our other platforms. Almost every single group that has joined some of the other DuneGlass Capital portfolio companies has been from word of mouth, and we're already seeing that at Aviva. And so it's interesting, right? When you get bombarded with the traditional private equity pitch, you kind of hear the same thing over and over again, and all of a sudden you hear what Aviva's doing. And we've had people in an introductory Zoom meeting say, I've got a friend that I went to undergrad with, or that I grew up with, that also owns a med spa. Can I introduce you to them? Because this is going to speak to them as entrepreneurs, as growth mindset individuals. And I think that's the most powerful thing about this model. It isn't for everybody, but it tends to attract the people that are willing to bet on themselves, that are willing to say, my best days are yet to come. And actually, one of our growth taglines that we're working on is this concept of you're worth more. Right? If you think about it, private equity is going to try to pay a lower, amount to you. They're going to try to hold back on some of the information that they share with you. But let's flip that script. Your business are worth more, and let's teach you how that exists.
And to that point, the people that we meet that are excited and have joined the platform, it's actually amazing. Multiple people, when I've been meeting with them, have said since that first meeting, they haven't, they've been losing sleep because they're that excited about it. So it's all about finding the right people, and the people that are excited about us, we're usually excited about. And so it's really a great way to, as we even think about that kind of later transaction down the road, that's what a larger private equity firm wants to buy. People that are willing to invest in and bet on themselves and believe in their business enough to continue to grow it and want to be part of building something bigger.
Yeah, I can see that. It does. You need that. You need an entrepreneur who wants to be part of something, but doesn't necessarily want to exit and just kind of be off on their own, right? Because they're still taking their brand and running with it. It sounds like, and just getting help, but by combining, profitability and revenue with these other groups, you're raising ultimately, and correct me if I'm wrong, because this is not my first my first area of expertise, but you're raising your EBITDA, you're raising the multiples potentially that you can get bought during the final transaction. And so if you get 50 or 60 of these groups together, that creates a huge kind of return in the end, because you've got these larger private equity companies probably that are going to be buying those types of brands. One thing I want to get a little clarification on, because and I think, Dan, you mentioned this. You were talking about like how folks get their when they're part of the platform, they're getting their percentage, and it's based upon how much they're bringing in, as the numerator, and the denominator is kind of how much the entire thing is, the entire platform is bringing in. So is that based upon their individual profitability, or is it just revenue? Like, how does that work so that they're figuring out what they're going to pull? And the reason I ask is, Daniel, you mentioned you mentioned that there's a way to protect themselves if another business is maybe not doing as well. And I just want to make sure I understand that exactly, because it sounded interesting.
Yeah, yeah. So the best way to think about it is it's almost like you sell 100% of your business into Aviva Aesthetics as the parent company, and
Yeah.
then you turn around and reinvest 100% in exchange for a tracking stock. And that tracking stock will track your practices, your business's pro rata contribution of earnings. So not revenue, but really earnings. You'll get quarterly financial statements, so you can see how is your business tracking, and it'll be a
Mhm.
detailed financial statement. We'll have revenue, we'll have COGS, we'll have EBITDA, net income, et cetera. But the idea is you'll get that on a quarterly basis going forward. And then normally what we do is we teach people, look, private equity investors will be looking for what's known as the TTM, right? The trailing 12-month snapshot. And so really we'll talk and we'll advise our business owners to say, okay, in the next 12 to 18 months, we're thinking about selling. We'll go ahead and say, I'll make up a date in the future. At the end of 2027, we're going to have our first sale event, first equity sale event. And so your ownership will crystallize based on your performance from Jan 1, 2027 through December 31st, 2027. And to us, I think it's so different, right? Because many people, right, when they think about selling, they hire a broker and they say, oh my gosh, I got to make my financials look pretty quickly. You should have spent 6 months, 12 months, 18 months preparing for that. And so that's one of the things we teach our entrepreneur partners. Let's show you the things that we can do to make sure that we're fully prepared to enter the world of private equity, and make sure that we take our time and don't miss any steps along the way. Does that clarify kind of how the ownership
Yeah.
works?
Yeah, absolutely, for sure. Yeah, I'm all, as you were talking, I'm kind of curious what has been some of the reaction from your private equity brethren out there as they see you doing this? Are they liking your model, or are they trying to copy it, or are they just kind of bitter about it? I'm curious, if anything.
Yeah, so we started in 2019. DuneGlass Capital started in 2019, and we sought out to really try to do something different. And it wasn't just DuneGlass. Some people say, "Oh, DuneGlass invented this," and it wasn't. It was when you surround yourself with experts. So we've got great lawyers at Miller Johnson, the investment banking community in Chicago, which is really strong. And you talk to all these folks, and you say, "What if you could design a different type of model?" Right? What if you took kind of how private equity has done it for 10, 20, 30 years and said, it's not quite perfectly aligned. And so if you could start with a clean slate and do it differently, what might it look like? And that's exactly how we started the entrepreneur equity type of model. And you kind of fast forward, there's definitely been some kinks along the way, and things that we've needed to do to make it work better. But it's interesting because private equity can't copy it, right? And I worked in middle market private equity for 14 years as a co-head of healthcare. Private
Hmm.
equity can't copy it because you can't charge management fees on undeployed capital. Or if you do, you have a very short window when you do it. And so in some ways, I thought to myself, at DuneGlass, right, I worked in middle market private equity. you saw the purchase price multiples just get higher and higher and higher. And there wasn't a lot of differentiation amongst the private equity firms. So my business partner, Ryan Graham, and I said, let's build what private equity wants to buy. Let's do it. It's hard work. It tends to be pretty messy. But if we build it brick by brick, what private equity wants, especially the middle market private equity, the 20 to $30 million EBITDA types of businesses, odds are we'll know what they want to find. We'll know the diligence questions they're going to ask ahead of time so we can be preparing for those. And then because there's so many firms that have raised so much money, there's an opportunity to be able to sell right into the sweet spot of private equity. And, some of my friends early on that now are running their own private equity shops, they're like, man, that sounds hard. Like, you tell me when you get to 20 million and I'll buy it, right? Because they want to know that
Right.
they've got an inside track to be able to find those types of companies. And so in some ways, I told Tyler this, Aviva Aesthetics, when we started it, there was an unnamed private equity firm based here in Chicago that said, you get it to 20 million of EBITDA and I will preemptively buy what you're building. And that comes from the reputation of doing it the right way, having successful exits in private equity, not just once or twice, but when you've sold a business to somebody and then they turn around and sell it to somebody else and people have made money along the way, I think that really speaks volumes about the time and effort that we take to try to do things right, to try to make sure that we're building long-term sustainable businesses. So I think in some ways it's fun because we're building what friends, and Tyler comes from private equity too. We're building what our friends that run private equity shops, we know what they need to buy.
Right. And Tyler, is it as Dan was talking, is it more like he mentioned, that it sounds like a lot of hard work. Is it almost more work on your end? Is there more for you to do on the day-to-day nuts and bolts than maybe in a traditional private equity platform play? Because really you are. It's like it's not just finding the right businesses to invest in, cutting them a check, and hopefully growing it. It's your success is as much tied into their growing as theirs. So just kind of talk about that experience and what it's been like to work with some of these entrepreneurs so far. I know you're
Yeah,
just getting started.
yeah. I mean, it's really been great. I'm not sure that I can compare from how much work one to another, but the fact that all of our interests are fully aligned, that's
Right.
what I really like about it. Because even if there's the perception of interest not being aligned or things being pushed down from a board that nobody knows what's going on there, then people have potential for distrust and other things like that. In our model, like we all win together. All of our team members are incentivized by, obviously besides their base comp, equity in the business to continue to grow. And when we all win together. There's really no way for kind of one group to win and not the other group, which really makes it really enjoyable. And we have some really amazing med spa owners that I enjoy. So, I really like working and I don't keep track of necessarily how many hours it is, but I'm texting with people and emailing constantly, and it's been really great and really excited to continue to build.
That's awesome. And are these all local, or are you doing nationwide for these? What's the footprint?
Nationwide, so probably the 48 states, but we'll never know about Hawaii. Maybe maybe Alaska, but
Let's do it.
right now we have partners all over the country. So we have some on the West Coast, a handful in the Midwest, and then also a handful on the East Coast. And we're going to continue to build those out over time. So it's really about early on finding the right partners that are really doing an amazing job with their business and can help us grow and believe in what we're doing. And then we'll continue to infill from there. So
Yeah.
definitely,
That's awesome.
yeah.
It is like more of a pure like MSO model really than what the some of the private equity groups are doing, because there's not, that's really what you're doing. You're providing those services, as opposed to, owning it and providing the services. We're going to bump up against time here in a second, but Dan, I was curious, you mentioned that you had done this in other verticals. So, talk about what that experience was like. What were like? How did that end? Like, what were the exits like? I mean, how confident are you in this model based upon what you've done in the past?
Sure. So I grew up more on the healthcare side than anything else. And so some of the early introductions, we've got doctor equity, which is a little bit more centric on kind of physician practice management types of partnerships. Entrepreneur equity was a natural extension And interestingly enough, I'm having coffee next week at the HPE conference down in Miami with a veteran from the Air Force, and I said, "Hey, you could take this model and turn it into veteran equity." And so it's kind of an interesting play on
Yeah,
ways of
for
teaching
sure.
more and more people about the world of private equity. But we've done this now in bariatric surgery, in oral and maxillofacial surgery, vascular surgery. Um, and then we've got an orthodontics and pediatric dentistry business. And the concept is the same, right? Actually, every one of those platforms has been created from word of mouth. So one doctor talking to another doctor, talking to a nurse, talking to a PA saying, "Hey, I've had this idea. I want to do something similar, but I just don't know how to take that first step." And that's literally how we've been able to grow these different businesses. Coming out of traditional private equity, I was used to buying businesses with 5 to 15 million of EBITDA and then growing them to 50 million plus of EBITDA. And what's interesting here is while we start smaller, I've probably pitched business owners now for the last 20 years. I've probably given like 400 or 500 pitches using a similar model. Like, hey, if we partner together, there's ways that we can grow and celebrate and really execute on the vision of what it is that you want to use as a defining term of success. And I think the oral surgery, which was really kind of the original platform, is the best example. We built a business in about 4 years. I'm the CEO of that business. Um, we've gotten it to 50 plus locations. It's over 150 million of revenue, mid to high 30s of EBITDA in that short period of time. And when we talk to prospective investors and they see what we've built and how we've built it, we've gotten really attractive sort of inbound interest. So we feel very confident that what we're building is going to be a sustainable business and it's going to speak to middle market private equity. And I kind of joke like every one of our platforms has had inbound interest from private equity firms asking to buy a minority, a majority, a 50-50 deal, kind of any flavor you can think of. And I think it's not accidental. I've been a serial entrepreneur my whole life, having spent 14 years in traditional middle market private equity and now kind of doing what we do at DuneGlass Capital. I think it's really the best of all worlds where you can truly marry up people that know how to run businesses, people that have had to invest in businesses, and what that means in terms of the different constituencies, whether you're talking about LPs or GPs, business owners, business founders. I think it's really helped us speak fluently across that landscape and allows us to eke out a little bit more success in what we're doing.
Yeah, that's awesome. I think it's a cool concept. Is there and Tyler, I guess I ask you this, but Dan, feel free to jump in. Is there a minimum level of EBITDA that you're looking for? Or can you get folks who are, you know, building and growing but still small?
Yeah, I mean, I think it's really about where we expect them to be in 3 to 5 years. From a revenue perspective, kind of our sweet spot is that $2 to $10 million med spa business. But as long as we see that you have the potential to be there, right? If you just opened and already doing 1.5 million, doesn't mean that we're not going to talk to you, right? If you're doing 4 million, but your EBITDA isn't optimized, as long as we see the path to be able to help you to get there, that's really where we can create a lot of value for everybody. So, there's not kind of any set guidelines. It's really about who the people are, where do we think they're going, and finding the most passionate med spa owners that want to build something bigger.
That's awesome. Well, I mean, I honestly, I can't wait to see. It's a cool concept, as I mentioned, and obviously you've done it before, so you know what you're doing. Um, it's interesting as the med spa industry develops. We're still relatively young, and there's so much room for growth, and I actually like the different these different models, because not one size doesn't fit all, and we need to have other options besides just a private equity exit, because that's not, and saying this to you two who've been in private equity, but it's, again, it's not for everybody. It can have its pros and cons, its ups and downs. um I would love to give you guys kind of a last word, like final thoughts, Tyler, and then Dan, and then also Tyler, please make sure you let everyone know where they can find more information if they want to reach out, if there's an owner right now that's thinking this might be a good fit for them.
Sure. Well, thanks for having us, Alex. We really appreciate it. Looking forward to spending some time together in Chicago, and
Yeah,
also
can't
seeing
wait.
you at the Med Spa show in a little over a month. They can find us also at, I think, booth 540 there. But also our website is avivaesthetics.com. And really any med spa owner, just reach out. Our goal and our mission is to demystify private equity for med spa owners. So whether you're interested in our model or the traditional model or just looking to learn, we're here to help, and we want to talk to as many people as possible.
Awesome. Well, you'll get that shot at Medical Spa Show for sure.
We're excited.
I went last year, Alex, and I was telling Tyler, this was even before Aviva Aesthetics was a company, and I'm like, Tyler, man, we got to be out there in full force. So I'll be out there as well, and really looking forward to getting to meet more people at the show. Yeah,
for sure. It's and we've got a good group coming. The numbers keep going up. It's gonna be a phenomenal show. I can't wait for it. We're like, as we record this, 6 weeks away, which is actually terrifying now that I think about it, because but yeah, no, I appreciate both of you, and I'll definitely see you out there, and we'll catch up. And again, thanks so much for the information. It's a cool thing you guys are doing. I love it.
Thank you. Awesome.
Thank you.
Thank you to producers Madeline Mahler, marketing content coordinator who organizes, schedules, and handles our guests, provides topics, talking points, and guest bios to our hosts. And myself, Jody Guzman, Technology Operations Assistant Manager. I handle the audio and video editing, voiceovers, and tech. Kate Harper, Senior Digital Marketing Coordinator, who makes all of our graphics and manages the podcast platform. Esme Uriostegui, Senior Social Media Coordinator, who makes and posts all the clips of the podcast to our social feeds. Our music is by Ghost Score. Thank you for listening to or watching the Medical Spa Insider podcast. Please follow or subscribe wherever you listen to your podcasts, and subscribe to our YouTube channel for future episodes. For more information about the American Med Spa Association, please check our show notes or in the description below.